Okay, welcome everyone. We'll start our lesson two. Today lesson we'll go through our LO2, which is learning outcome two. As a couple of you know me, my name is Anjum Sattar. Please, if you have any question, drop me email anjum@ukversity.co.uk and I'll try my best to get back to you as soon as possible. The question today, which we'll go through LO2, which is be able to calculate, income tax and national insurance contribution for taxpayer. And during last lesson, we discussed about taxation system. We discussed about tax planning, tax avoidance, and we discussed about tax planning is illegal. And today lesson key focus will be NI, capital gain, and income tax. That all will be our discussion will cover. Please, if you have any question during the lesson, feel free always ask and we'll go through. So today lesson scale 1 to 10 is good to be reflect, please, what we know about employment income, saving income, or property income. So is good reflection. We deal with the taxation before or not. So personal allowance, we had a discussion in the previous lesson. We discussed 12,570 is the personal allowance. Application of the relief for the pension payment, charitable donations. We'll discuss about the calculation of the income tax, calculation of NI contribution for employees and employers, and tax planning techniques to minimize the tax liabilities, and tax and national insurance rates bands, which we'll discuss as well, all which we look in the Finance Act 2023, and we can look around the benefit in kind and determine the values. That will be all in our discussion. So please, in previous lessons, we also discussed, okay, so please, always good to be just go through the Finance Act and apply the rates. That's is crucial to learn about how we can apply the rates. So the base rate, which is basic interest rate after the personal allowance, 1 to 37,700 is a 20%. Dividend rate is a 8.75, and the higher rate is 37,700. And if you earn more than that, is the additional rate is 45%. So starting rate is a 0% applies to taxable saving income, where it's all within the 5,000 to taxable income. And the saving income nil band, if your basic rate taxpayer is 1,000 and higher rate, if you are a higher rate taxpayer, then it's the 500. So that's which we need to be the dividend income nil rate, all the taxpayer the 1,000, that's apply, and then of course afterward is 8.75 and then 32 point. So that's personal allowance, please. If you're earning more than 125,140, your personal allowance will be reduced to 0. So that's we need to be look around the days less than these are residencies, yes, and your domicile, that's which we had a discussion. If you're living 183 days or more, you become automatically resident of the country and you have to pay the tax in that country. So child benefit, of course, we can look around the 50 to 60,000. The charges of 1% of the amount of the child benefit received every £100 of income over 50,000. That's which we need to be, that will be reduced accordingly. That's we need to be look around. The car benefit, of course, depends. Of course, fuel benefit, which we can look around the car size, the market value, your contributions, all which we can look around. Of course, 130 miles or more electric cars. So what percentage of the benefit, which we are entitled, or we can free more than we have to pay, and adding into the tax, prospective of the brackets, you need to be look around accordingly. Pension scheme, of course, the annual allowance is 40,000, minimum allowance is 4,000, income limit is 240,000, and lifetime allowance is 1,073,100. That's really we need to be look around accordingly and authorize the mileage 45 first 10,000 and after is 25 pence per mile. That's we need to be look around. That's all and then of course, if you're doing business and all of this, so we can look around the man pools and things which we had a discussion when we'll go through business and individual tax. That's which we can look around the corporation side or the business tax. VAT of course is the 20%. The threshold of course standard is 80,000 is a compulsory registration, and the 20% is the standard rate, and you can registered yourself if your turnover dropped down to 83,000. Of course, different schemes you can choose. Uh, Inherent tax. We can look around, which is if you're earning to 300. If your value of the house is 325,000, of course you have to look around the connected person 7-year rule and the rate. So accordingly apply. So please, these are all if your 7 years or more. Yes, 6 year, but less than 7 years, 80% number, right, is 100%. So the capital gain, the tax which we can look around, annual exempt limit is 6,000 if you have a gain up to 6,000. Otherwise, you have to pay the tax accordingly, which we need to be further look around. The normal rate, lower rate is 10%, higher rate is 20%. The residential property rate is 18%, higher rate is 28%. Investor relief, we can look around lifetime limit and the rate of the tax 10%. The business asset disposal, bad debts relief, yes, we can look around those in separately. Yes, class 1 and insurance. If your employees pay, the 0%, of course, is £1 to 12,570. If you're earning more than that, your 12% NI. If you're earning more than 50, the 2% NI. Employer is pay 0% first to 9,100, and after that, employer paying 13.8%. And employment allowance is available 5,000, please. So 13.8% is the insurance which have to employer need to pay accordingly, which of course is this tax year budget is further increased, which we can look around the next year finance sector accordingly. Okay, so please, that is the fine, the penalties if you deliberately do things that we need to be look around. Okay, example of Finance Act 2023 and 24, please. I can share with you document, and that's is also available on Moodle page, so please you can follow accordingly. That's which we can look around. Let's please move to the next. We can look around 2.1, calculate the taxable income from the employment investment. So please, we have to look around the rates, and then these are the old rates, the previous years, which we got, that was 7.5% dividend. Now we have 8.75. So we'll look in the finance set. Let's look, the example here, please. So for tax year 2023-24 June, the trading profit is 184,000, and her income tax liability is trading profit is 180, personal allowance, taxable income, of course, which we can look around, trading profit and liabilities. So 20% up to 37,700 after, so those we can look around. Then of course we can further look around the 40% remaining limit, because if you're earning 184, which is more than 125,140, that's you have to pay tax on all the amount. So first 37,700 will be 20%. Then of course will goes up to one look the limit, so 87,440 further will goes 40%, and if your rest will go 58,600 and 860 will go 40. So that's the total tax liability. So no personal allowance. Anyone, any question here, please? Any point you want to clarify if you have? Okay, so please, we need to be look around and apply the tax rate accordingly. Yeah? So we'll look around the Finance Act, and of course nowadays we can use the online calculators and putting the figures. So source of income, less relief, if any relief, personal allowance, which we can, non-saving income, which we can look around if you're a basic higher or additional taxpayer, and these, the dividend rates, and then we can apply accordingly. So tax planning is illegal, which we can. If we look the previous year's Finance Act, like, this is one of example, 2019 and 20 Finance Act, which we can look around. The salary here was 50,000 to 90, and is deducted 8,400. The bank interest 13, and dividend we have 7. So we can look around first, add them all. What is the total income? Is 58,590. Non-saving mean employment, saving income, and dividend income. Investment, that was 12,500, not 12,570, of course, whichever year. Sometime maybe you're going back to your clients, you making adjustments accordingly. So please, apply the finance sector accordingly, and look around. That's, 12, 5,037, 7. So we need to apply the rates here, and then rates here you have to look around, because that's the basic taxpayer up to. So then please look, the dividend. So then if we look next, of course we can apply the 20%, and 290, which is higher in the IE and non-saving income, that's 40%. The saving nil band is 500, and the higher rate will be remaining is 1300, is 40%. That's, and dividend income plus 2000 is 0 rate, that was in the year. And then of course we will pay 32.5%, because the reason is it's a higher, and not, it's come under 8.75. So we can look around. The income tax liability is deducted at source, and then what liability must we have. So please, there are good few examples, and plus the document I shared with you in the chat box. Share with you. Yes, please, you can click, you can download. I'll share with you at the end as well. Any question from anyone? No, we all okay? Yes. Please, if any question you can ask, we can go through in detail, but that's, generic. We need to be look around the rates, and we have to apply accordingly. So there are good few examples we included, but we can look around according to the Finance Act 20. If you want to use the previous year example, is fine too, but better to pick the example for your assignment purposes as the new handout, which is Finance Act 2020. So in this we included, front as well as the previous. So let's see, we look the 2.3, determine the taxable value of the benefits. We can look around the benefits. We can look around exempt benefit. We can look around the taxable benefits. So living accommodation is provided by the cars, and the fuel is provided by the company. So your personal allowance will be reduced accordingly. So we have to look around again the rules, the beneficial of the loan. And we have to look around the base rate, and the base rate, at least, we have to come under the benefit. If you're getting nil rate, you're not paying any loan, anything on, or any interest. Can be due to the job, the loan, then the gift tax. So we have to look around accordingly. So please, job related accommodation subsidize, the canteen. We have to look around the removal expenses, 8,000 from new employment. If you're moving job and you relocating, that's up to 8,000 we can claim. If the employees need to be moved, expense incurred, the benefit provided at the end. So which we have to look around again in the rate. So payment per night up to £5 night, in the UK, and £10 overseas. So we have to look around, that's exempt. If we have a more, then of course it can become under the benefit in kind. That's, for the need to be adjustment accordingly. So please, we have to look around if employees attend, full time course, and can receive the tax-free pay up to 15,000 per academic year. Okay, so that's, which we can look around. If employees attend a full-time course, can receive the tax-free pay up to 15,480 per academic year. Yes, it's a full-time course. If it's a course part-time, so we have to further look in, deep dive in, and that's, which is some benefit towards the professional development we can claim that. So here we can look around 2019, the price of the car throughout the year. Employer only paid, 23,500 for the car after discount. But the car was is the diesel Indian CO2 emission level was 107, and it does not RAD2 standard, and employer paid 5,000 for the diesel during the year, 50% of which was the private journey. So we can look around the benefit in kind and contribute, 5,675 towards the capital cost of the car. Then in addition, contribution £40 per month for the private use and £30 per month for the private diesel. So calculate the benefit in kind. So we have to look around the CO2 first. Yes. So round it down to 105 grams. So you have to look around, because 105 minus 95, that's the free limit, times by 1 hour 5 equal to 2%. So we have to calculate, that's the formula is normally given in the tax rule purposes. And plus, so plus is the diesel, so 4% will be additions to if it's a car, so we have to look around separate, and the car benefit, the listed price, what being maximum benefit can be the given pay towards diesel during. So rest is 20,000, and that's, we can look around the 29% is the benefit less the implies contribution, and now it's coming, the amount which we are getting the benefit is 5320, and then we can add it to, and then we pay the tax on. So fuel benefit, we've been given 129% of the, that's, the value, and less, the implies contribution if we have towards, and then we can calculate, so the price paid by the employer for the car is irrelevant. There is no deduction of the contribution towards the fuel, as she has not reimbursed, the employer for the cost of her private. So we have to look around if she paid her own. So that's, which we can calculate accordingly. So paid on the gross earning, class 1, class 2, and NI contribution, which we just went through our rates, please, that need to be deducted accordingly, and we have to follow the rates. Okay, so please, that was the previous implies contribution 12%, the gross earning between, but now of course 12,570 we have to look around now, and 2% the gross earning above, so which is, we need to look around the new according to the finance act, 13.8%, that was now is 9,000 instead of 8. Employment allowance now 5,000 instead of 3,000, and that's, which we have to look around the contribution according to the class accordingly, please. That's, so again, here is a question. Few examples, please. We can include from the new finance act, which is 2023 and 24, or the previous one, depends which clients you're dealing, so we have to look around the salaries, benefit of the cars, benefit of living, free meals, and the vouchers. We have all these, we have to look around. Benefit in the respect of the company car and the fuel not applicable. If we have to look around the limits there, and then of course, the voucher to that point. So please, total earning, and of course then we can calculate, the tax and the NI contribution. Yes, 12%, and above than 50, the 2%, that's, NI contribution is 5,405 pounds and 16 pence. So please, if you want to work towards the distension criteria, always good to be look around whatever the distension criteria you've been given, which we look, more in detail. Demonstrate how the relief of the pension and the payment are charitable donations are applied to income tax calculation. Payroll, giving, gift aid are occupational and the personal, which we can look around the maximum contribution, the method of giving relief, and the implied contributions towards. So payroll, giving you earn as, pay as you earn. So really we need to be look around PAY, so we can look around the contribution deducted from the salaries, and employer paid, over the charities and the tax allowance, and those, we can look around the gross them and add it back, so depends if it deducted at source, so you can claim back the taxes. So that's please we need to be look around the donation and net basic rates and all. So please that's we need to be applied accordingly. We have few examples we included, so which we can look around. You can apply the New Year's Finance Act, or you can look around the previous. It doesn't matter, but of course better to be in assignment. We can pick the example which I gave you the link. There are plenty of examples there. I'll give you the books as well, so we can apply the new rates. It's better to include the example of the new with the new rates. That's only the key. Of course, personal allowance, which we can look around in dies, and please, and we have to calculate 20%, 40%. Of course, it's 120,000. So we have to look around these personal allowance and all the working you've been given on the next slide here. Please, we can get to be look around the personal allowance, the net income, gross gift aid contribution. If you have so time by 100 divided by 80, so we have to cross them up so we can, and then adjusted net income we have and the less the limit of 100,000 if you're earning more than, so excess is 30,500, 50%. That's your personal allowance can be dropped. Yes, because of course if you're earning more than 100,000, like now if you're earning 125,000, 140, your personal allowance will be finished. Okay, so the revised personal allowance, then we can look around revised threshold, hire an additional fee, and then add the gift aid contribution which we have so we can further look around the threshold revised because that's you gave to, and then we can calculate the tax liabilities accordingly. So please type of pension, occupational pension, set up by employer usually contribute. Of course, you have to look around the contribution. It can be varies in job contracts as well, which we can look at. A lot of things change in terms of the pension. So please, is a matter of further exploring. If you have a clients, look around in the finance act and add, and deals accordingly, because I can give you book and the examples as well, which we can look around very in detail, but you can for the assignment purposes, because it's not exam based, so you have to add some examples. So employment income, then less, the pension contribution if you have, the net income you have, and personal allowance afterwards. And then of course, we can look around taxable income, how much you have, and then you can apply the tax rate accordingly. Then we can, second, we look around if we don't have it, so we can look around taxable income and the rates, so we can look around the benefit. He paid 500 for the employer occupational pension scheme, and he paid 400 contribution to his personal pension. So you have to look around the personal pension or employers. Yes, so employers we're looking. So please, anyone, any question if you have the total pension contribution, income tax liabilities, so we can look around accordingly, please, and the pension contribution in this case. So both methods produce the same overall result, the liabilities, and neither scheme make him better off, and the amount relief is the same. It is just the method of relief that is different. So working extended, so we can look around the calculation, and we have to make sure, we can show some working and adding the relevant examples. So please, we included some link, to look around and explore. Please, these are further enhanced. You can look around the things, so it's good to watch. And especially, please, if you want to, I'm just sharing with you the handouts in a minute. I share with you a couple of you were in lesson 1. So just 1 second, I'll share with you the booklet. Accordingly. Sorry, I'm just sharing with you a document. You give me 1 minute, please, so you can download from the chat as well. Okay, so please, one of the document you can download, which is quite good example. So that's those cover are these learning outcomes. It's good too. And this article, we have some cards and previous finance act. If you would like to use example you want to pick from, and I'm going to share with you the Finance Act 2023, the booklet as well. So that's please, you have all the chapters. I'll show you in a minute, and that's quite good to use, please. For your assignment purposes, you can pick the example or any example if you want. Please, don't mention the client name, of course. We have to make sure keeping in view of the GDPR as well. Okay, so the last one which I'm sharing with you. Okay, I'll share with you now. Okay, so please, if you look this booklet, can you see all this? So you can. So this is the booklet. You can use it, the latest one. So please, you've been given all the rates within it. You've been given, yes, personal income, capital gain tax, NI contribution. So all the examples are there. So it's quite good to use. So you can find the chapter from and look around in this book here. So when we'll do the assignment discussion, we can pick example few for the sake of, for as our assignment. Those we can discuss and we can apply the rates accordingly. So that's a different scenario can be in the tax plea. So we have to look around the basic, at least, we are well aware of. That's help, So that's basically given. Okay. Thanks for anyone. Any question before we finish, please? Today we discuss about saving and benefits, and we mentioned a few examples. Please, if you have any other questions, please ask. You want further look around any specific, so we can go back to that particular scenario. These are the generic example, which is good to be. We can pick any example from the booklet, and we can go through during our assignment discussion. Okay, so next week, next lesson we'll go through our LO3, and then the following lessons will go through our assignment discussion. So please, if you're doing side by side your assignment, of course there are sample assignment available. Our Moodle page, it's the handout which I gave you, ACCA, and other is which is the booklet, where all the rates and the question and the example you have, to apply the rates. So thanks for attending, and hope I'll speak to you next lesson during our next lesson. Thank you.
Thank you.
Thank you. Have a nice weekend. Thanks. Bye-bye. Thank you.